You made it. Module 25, our final module of the semester. Congratulations. We've covered a lot of ground. We covered a lot of financial accounting concepts, terminology, the language of business. We've covered managerial concepts up through budgeting and standard costing and variance analysis. Our final area is investigating capital budget along the lines of decision making. It's still part of managerial accounting and even finance, if and when you take that as well. But you're going to be making financial decisions based on a set of criteria that we will be examining in this module. So let's just dive right in. Let's talk about what's going to help us make decisions for capital budget purchasing and long-range planning. So we're making these capital expenditures, CapEx, these big ticket items, these investments. We may be going in a new product line or offering new services. We may be expanding current assembly lines or current production lines, or we may be just rearranging or changing our current facilities. But these are going to be taking in capital outlays, capital expenditures, that's why I call it CapEx, and trying to figure out how do we evaluate whether to go forward with and make these decisions or not. Well, it's all going to be based on cash flow. And that cash flow are future financial inflows. If they exceed the present value of our initial cost on some of the methods, or just exceeds our costs in general, it's a go decision. If the actual costs exceed the potential benefit, it's a no-go decision. So let's take a look at the capital budgeting process. So we're going to identify a variety of projects. Some, we can't do them all typically. We're going to have to make some decisions and make for the best projects with limited funds that we are able to dedicate. So we're going to evaluate the different proposals, and we're going to have certain criteria that we reflect on that will be the basis of our decision. Steps to being effective, we have a long-range planning, and it's a model that is, as I said before, about cash flows. And usually cash flows over multiple years. Some might have negative cash flows initially and positive cash flows later, but we have some analyses that will allow us to take the present value. But it has to be consistent with our strategy. Do we have a well-defined business strategy, and do we know what we're doing with that? So I'm going to magnify this up a little bit. And we're saying, okay, effective capital budgeting requires a defined mission, long-range goals, and a strategy. Does this fit with our strategy? Does it fit with our direction? Does it fit what we've told our shareholders? Does it fit what our managers believe is the direction we're going? We have to identify potential capital expenditures or opportunities to expend, and then determine whether the proposal fits our mission, goals, and strategy from above. So if it does fit, we can continue down the path and evaluating it. We'll do some data gathering and analysis using some financial models. We'll plug those numbers into those models. Increased analytical rigor and require level of approval as importance and size of project increases. So, it doesn't take a much decision to figure out if we're buying paper or buying a copier or buying a lower level piece of equipment. But if we are doing some heavy expenditures, we're going to go up the ladder to higher levels of those responsibility centers, those investment centers. The people making decisions are going to be having input and involvement. Then once we make decisions, we'll develop implementation plans for the projects we do approve, and then we'll track them. We'll monitor implementation and revise implementation as projects as required. And then we do a post audit. We do a post review and see if we are on track, if things are really realistic and things have come together. So that's what's going on as we look at and analyze the direction of where we're headed. So this is the big picture of what we want to understand. So we have our committee that makes decisions, a capital budget committee. Typically, you have an audit committee decides on auditors. Well, a capital budget committee decides on the projects to invest in. Now, provides management guidance in the formulation of these proposals. So it is a guidance role. Eventually, there may be ultimate decisions involved as well. They may pre-authorize certain types or amounts of proposals with certain guidelines, certain criteria. And finally, they're responsible for the post-audit. Keep the project on target, identify the need to reevaluate the project, helps with the decision about future projects, see how well the estimates go, improve the investment proposal quality. So they are a QC or quality control aspect. And the capital budget committee better evaluated proposals that helps them in the evaluation process and what they're looking at. So this is the big picture of capital budgeting. We're going to continue on and look at some actual, mainly 4 types of analyses that we'll be accomplishing. And so we'll take a deeper dive in doing that. But that's the first round. And this is just the overview of capital budgeting and the process we're going to be investigating and exploring. Thank you for listening.